Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news, oil prices and bond yields are rising in tandem. But first, Wall Street has closed lower at the end of last week, with most benchmark indexes shedding almost 1%. Tech stocks fared the worst. In Canada, their consumer prices rose 2.3% on a year-on-year basis in March, following a 2.2% increase in February. This was the largest such increase since October 2014. But excluding petrol, their CPI rose 1.8%, matching the gain in February. The EU and Mexico have announced a major update to their existing free trade pact signed in 1997, a development that will allow almost all goods, including agricultural products, to move between Europe and Mexico duty-free. That will include dairy products. And the EU's latest survey of consumer sentiment moved slightly higher in April, holding the elevated levels seen in 2018, the highest since the survey began in 2005. In India, markets reacted aggressively, with bond prices being hit hard as unexpectedly hawkish central bank minutes were released. They add to higher oil price pressures and suggesting that higher official interest rates are just around the corner. The rupee fell to its weakest in more than a year. In China, lending to the real estate sector is exploding. The March quarter of 2018, lending by banks on property was up more than 20% year on year, reaching a massive $4.5 trillion US. The US may be excluded, but Australia thinks the UK is showing real interest in joining the TPP. In a television interview, incoming RBNZ Governor Adrian Orr says New Zealand banking sector doesn't share the cultural problems that are coming to the surface in the inquiry into misconduct into Australia's financial industry. He also doesn't see local instances of failure that are being reported in Australia. New Zealand's principles-based regulation is proving a far better framework than Australia's prescriptive rule-bound system, which just asks to be gamed. The US Treasury 10-year yield is still rising and now at 2.96%. That's up 4 basis points. The flattening track of the US 2-10 rate curve is on hold. The Chinese 10-year has paused its steep downward track and is now at 3.54%. That's a 1 basis point gain, while the New Zealand equivalent is 2.89%, up 2 basis points. Gold is at $1,355 an ounce in New York, down $10 an ounce. Oil prices are basically unchanged and now still just over $68 a barrel, while the Brent benchmark is just over $73.50 a barrel. The North American rig count moved even higher last week, and the US president sharply criticised OPEC, blaming them for the higher recent prices. This had no impact on them, however, leaving oil prices at 3-year highs. Trump may not have any impact on oil prices, but markets know that oil prices and US bond yields tend to go in the same direction. The Kiwi dollar is starting the week at 72.1 US cents, and that is now a substantial retreat over the last week. It was 73.6 at this time last week, so it's a fall of 1.5 cents. On the cross rates, we're at now 93.9 Aussie cents and 58.6 euro cents. That puts the TWI at 73.5, 100 basis points lower in the week. The pressure of our relative strength of our government bond yields is being relieved in our exchange rate. The problem for us is that US-based oil prices are higher, and the lower exchange rate will make imports more expensive. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.